Welcome back to Fast Market. I'm Alex Coffey, joined by Kevin Hinks. We got you back, Kevin. We'd also like to welcome in Megan Brantley, the VP of Research at LikeFolio.com. Good morning to you, Megan. Happy Friday. Thanks for joining us. Talking about one that's hard not to talk about when you're talking about markets and its recovery and its stay at home. It's really a company that's almost in every headline, it seems, and that's Amazon. We were just talking Netflix a little bit. Amazon's got its hand in that space as well. But what was LikeFolio most focused on here, and what do you guys have from your data side?
So whenever we look at Amazon, they have so many different components at play, so many different brands to track. So we're listening for consumers interacting with these brands, whether it's Amazon Prime, whether it's the Fire TV, like you mentioned, whether it's Whole Foods. And so what we see as a whole for Amazon is that purchase intent mentioned, so people interacting with these brands and actually spending money or using their products and services, is up 129% year over year. This is the 90-day moving average. You can see that uptick really that catapulted in March and is still showing significant strength. Whenever we look specifically, we have the most insight into what consumers like to talk about these consumer-facing brands within Amazon, and so Amazon Prime is one of the really I think indicative places that we look to see how are consumers, regular consumers interacting with Amazon. And what we see for Amazon Prime is that in this most recent quarter that started, so this is the quarter that's underway that started around March 29th, that Amazon Prime brand year over year growth is pacing about 54% year over year. And so I think on their last report that had a little bit of this COVID impact in it, that purchase intent was about 23% year over year. So there's definitely, a continued acceleration of people who are using Amazon Prime. And now looking forward, we're just watching to see if this will maintain. Are people going to continue to use now that they're on board and have the subscription? And in most cases, so far, our data says yes, they are.
Megan, it's interesting to me. Amazon has been consolidating lately, as we might predict with everything that's happened with NASDAQ stocks and FANG stocks and the rotation that we've been talking about on the TD Ameritrade Network for a couple of weeks now, frankly. But that stock is still, if you look at mid-February, that stock was $2,180. It's now $2,460. So it has moved up along with that increased demand. And how could it not? Frankly, how could this stock not be, outperforming even on a day when Elon Musk comes out and says that they should be broken up? Frankly, the stock is still up, slightly, not as much as we might normally see on a big day like this. But do you guys cover at all what I think is the biggest risk to a stock like Amazon, and that is regulation and government intervention and potential for being broken up, things like that? Is there any records or data that you have on that kind of a subject?
We really focus in on the consumer response. So I think that if there were impacts that then would trickle into how a consumer interacts with Amazon, we'd start to pick up on that and we'd start to pick up on those shifts. But really, the consumer just wants to know that they can go online and get their Amazon Prime and have it delivered, whether it's today, tomorrow, or at the latest 2 days. And so I think that that's key, is that so far, we're listening to what the consumer is thinking and what the consumer cares about. And from a sentiment perspective, Amazon happiness is relatively high. It's near 70% positive. So I think that, consumers, at least with the brands that they're engaging with and the data that we're listening, we're picking up on pretty solid consumer happiness alongside that just explosive demand growth.
Yeah, and Megan, I kind of see a tale of two pieces of this demand in terms of the growth. We see the people who are already maybe Prime members, people who already used Amazon for some purchases or used it for whatever reason, that used it more because they were at home and they needed to get things delivered. And we might see that kind of goes back to more normal levels, I'd suspect, as things reopen and people are able to spend more time doing other things and go to the store and things like that. but I'm sure, and your data is kind of indicating that as well, there's a growth in just members and more people who are subscribed to Amazon Prime now that maybe weren't before. And my guess, and this may be, is just speculation, but I'm trying to follow logic here. If you spent money on that membership, you use the service, you're 70% of the people doing that are happy with it, they're probably more likely now to be a new returning customer who, Amazon didn't have before all of this. So they got a short-term spike in demand, as so many companies did, but they also grew their customer base, and, that's a net positive as well.
Yeah, I think you bring up a really good point. And I think that Amazon has even reported that, their Prime members spend more than the non-Prime members. So once you are on board, you are incentivized to spend more. I think that, that's what we're seeing so far, is that the usage rates, as you saw on that last chart, that quarterly bar, that's the highest that we've ever recorded for Amazon. But also, as Kevin mentioned, the market knows this, and that's why the stock is priced like it is. So I think that this is something that we'll watch to see, is there continued usage. So far, it looks like, yes, that consumers are, not only on board, but they're using Amazon Prime more. But that's definitely something to monitor as things kind of normalize. One element that we have seen normalize significantly is grocery deliveries. We saw a huge peak at the end of March, and it really held for about a month, and now things are returning to pretty much pre-COVID levels. And so, that's something that I think that is an example of that normalization kind of occurring. But from the Amazon Prime brand as a whole, we're still seeing some strength.
We are starting to see a little bit of a normalization, Kevin, in terms of how the stock performed, as you mentioned. Only up about 1/3% today. NASDAQ as a whole is up 2%. We talked about the Russell up over 5%. S&Ps are over 3,200 again. So there's all these positive things, and you're not really seeing this outperformance by some of the winners of the stay-at-home trade. But one thing we haven't even talked about yet is the AWS component, Amazon Web Services. Based off our Trefis data on our company profile feature of Thinkorswim, 45.4% of it. And as we know, it's kind of the cash cow of it. It's the high margin part of Amazon's business. Kevin, again, following logic here, and feel free to correct me or add any thoughts here. But as we reopen here, and some of these smaller businesses were so impacted by the lack of the infrastructure and ability to work from home, I think there's now an added incentive to get things on the cloud, to get things electronic, to get that infrastructure in place, that if there's ever a need to have a business go mobile and work from home for whatever reason, that this is in place before the event happens.
Yeah, I mean, it's so funny. We constantly talk about the consumer and Amazon, and then you look on the company profile, and 45%, the largest contributor to their bottom line, is AWS. And it's something that we rarely touch on. And by the way, that's where most of their margins come from. So this is a name that, for all the things that we talk about with Amazon, AWS is the one that pays a lot of the bills. I mean, Amazon Retail and Whole Foods and their groceries, things like that, and just their massive infrastructure that they have brings in a lot of revenue, but most of the money is made by AWS. I think it's one of the more fascinating parts of Amazon. But that said, I think personally that there's no imminent risk to Amazon's business model except the government. I keep going back to that because we've said that on this network many times. There could be some type of government intervention or regulation that's going to hurt this name. Nothing else is. They'll be, their business is flourishing and running on all cylinders. So it's really an amazing company, an amazing story. But I'm worried about this and their relationship with the U.S. government, guys.
Megan, I'll give you the final thoughts here as we wrap this up on Amazon. And I'm not going to ask you guys to jump out there and tell me, bullish, bearish, because there is just too many variables when it comes to a company like Amazon, especially when it's not an earnings related event or anything like that. And given where we are in terms of the reopening, and there's so many different directions things can go. But I do want to know from what LikeFolio's perspective, you guys are tracking all sorts of different trends of different companies. What's something that if Amazon's going to continue higher, you feel is necessary for them to continue to execute well on?
I think that, we've already touched on this recurring prescription with the Prime brand that we have insight into, but I think that the AWS portion, the cloud side of things that Kevin brought up is really interesting. This is something of, a tailwind that we see lifting in general as more and more businesses move to the cloud, as more and more data is needed to be stored and processed. So I think this is a case where we see increases across the board, not only for Amazon, but also for Microsoft. But it could be a case of a rising tide lifts many boats. And so I think that Amazon is well positioned. We'll continue to, kind of watch out for this. And but so far, as you mentioned, business seems to be firing on all cylinders.
All righty, Megan. Good stuff as always. We wish you a great rest of the day and have a great weekend.